Hey everyone, right. What I wanted to share with you now was a look at the GJ sell that I posted yesterday. It hit take profit earlier today, but versus technical analysis. Now, I've spent probably 9 to 10 years of the past 13 odd using technical analysis in trading, and it got to a point where, yes, I can spot things on a chart. That's fine. How reliable are they? How good's my edge? What's the data look like, and how much time am I spending on charts? Got to a point where it was just exhausting, and I wanted to create a different way that enabled me to reduce my decision making daily, well, to a point where I don't make any on trading, and stop feeling exhausted, constantly looking at a screen, having to make all these decisions. Our brains simply, our cognitive functions just can't deal with it. And what we do is we lure ourselves into believing that we were right and that analysis was really good and we were, on point with that support resistance or technical analysis, when actually the markets are so random that they are impossible to predict, whether we or you or whoever like to admit it or not. So my approach completely changed. I now look at the markets in a systematic way with obviously our algorithm, but it doesn't have to be our algorithm or system. It can be any system that you look at to make sure you're the right side of the market. I think most technical analysis also, or our brain likes to find certainty in randomness, and we like to try and call the tops and bottoms of these moves because it makes us feel good. And the GJ sell from yesterday is just a great example that this analysis with the double top with a trend line break that I'm going to show you now, I don't use that anymore. However, I still see you can't stop the brain from seeing things when you look at a certain chart. And if that analysis is right, my strategy would pick this up anyway because it's a trend-based strategy. So let me just show you what I mean by that. So the GJ sell, we entered here, take profit was here. We're pulling back now. We might retrace. We might go up. We might go down. This is the reality of trading. No one truly knows. People might think they do, but they don't. So let's just look at the chart. We had a buy here as well, and that hit take profit. This one hit stop loss, this sell. But technically, what do we see? Well, there is this ascending trend line here that we could, this is the other thing, people make their lines fit, don't they? They see a move that's happened or whatever, and where is this trend line? Is it there? Is it there? Is it there? Or is it there? No one knows, right? But we can make this fit so we look like we've got a break and a retest and a drop, potentially, but it's just subjective. We could see numerous different structures within this too. There's one there, there's one there, or here, or and they've all broken, but then they've just gone on to make new highs too. And how many short sellers were there around, subject to how that candle would have closed, around that level, or on the 4 hourly? This has been relentless. Here's a great example as well. Oh, here we go. Double top, rejection. This would have been a down candle, and then we've just made a new high and continued up. So anyway, what I'm trying to say is it's all subjective. But what we had on GJ was, yes, this break, retest, and a drop that actually worked. But we also, I'm just spotting these all over the place. Look, there's one here as well. So let's just take my strategy off. There's one here, look. So trend, break, retest, or there's the longer one, or I've probably just plotted 7 on that chart, which is right, which is wrong. Well, the answer to trading is there is no right or wrong. So many people start this and think, well, actually, what did I get wrong there? Well, nothing. The market will just go and do what it wants. So the other thing here was this 1, 2, 3, 4, 5 rejection here at this level, and we've dropped. But my point is that we caught that anyway without having to draw or do any of that. Okay. And that's the power in Pine Script ultimately, and having a systematic way to trade. So because there's a clear system and strategy, we were able to code this into Pine Script that made sure that instead of me guessing or thinking this strategy looks like it works, when something looks like it works, you've got a small amount of data probably. You might be looking at a week, or you might scroll through the last 10 trades or a month. That is nothing, right? That amount of data is nothing in the scheme of 1, 2, 3 years worth of data on hundreds and hundreds of trades. What you end up having is recency bias, because it looks like it works or it looks like it doesn't. But you've got to be able to have more data than that. Data equals confidence and belief to enable you to stick at a strategy through a losing run. Now, this has had losing streaks, but it's had winning streaks too. So that sell trade that hit take profit is here. The buy trade before it that hit target is there. We've had a loss, another win, a loss, and a win. So when I say, and I post a trading view I did, scroll to the bottom and have a look at the data. This is what you can see. So out of the last 1, 2, 3, 4, 5, 6, 7, 8 trades, 5 of them have been winners, yeah? But there have been losing streaks, and there was one not too long ago, which was here, 9 odd trades, right? That's just, whether you like it or not, that is normal. Those losing streaks can and will happen, but the problem is you probably haven't stuck to something long enough to see that, and that's normal and that's fine. But true progress happens when you understand that, stick at it, and overcome that bit of the process. Because with a win rate of 37%, we're going to lose more than we win, and there are going to be a probability spectrum within that of losing streaks. But add that in with a risk to reward ratio on average of 2.6, then we've got a lovely financial edge. So basically this is based upon a £5,000 deposit starting from 2017, risking 1.5% per trade. We've got a 1.2, sorry. We've got an integrated lot size calculator, and this can be fully automated too. So ultimately this helps you, because if the market's moving in a particular way, we'll catch it anyway. We can take the decision making out of it, and there's proof of every trade, wait for that to refresh, within this data. Okay, so we've seen the losing runs, the red trades are losers, the white ones are winners, and there are consecutive winning runs too. But this is where also, so it can work both ways. So a losing run gives people fear, they don't stick at it, there may be strategy jump, yeah. But the winning run gives people overconfidence, and they think they've cracked it. Oh, you know, I've on 3, 4 winning trades. I'm going to now go really aggressively on the next trade. And then that's the loser. That might be then the start of a losing streak. And instead of them seeing steady equity curves, they're either making a load or losing a load. But after you've made a load, you will always lose a load if that is based around randomness and not a specific plan around your risk. That's why trading with a percentage risk is absolutely vital, and not just randomly picking a lot size. So that's it from me on that. I just wanted to show you that technically double top, trend retest, whichever trend line you want to look at, and this trade played out. It might not have played out. Let's just say this was invalid and it went up. Then we'd have picked a buy up with momentum as and when that was valid. So instead of trying to predict where the market's going to go, we trade what we see and follow price ultimately. And let's just see how, you know, this pair continues to play out. But it's definitely my favorite one to date. Have a good day, everybody.